GST on online gaming companies, which has so far continued to be a major cause of concern for a lot of online gaming platforms. We now know that the levy will come into effect from 1st of October onward, but companies seem to be bracing for what is likely to be a cash crunch for them. In fact, many of them are now letting go of their employees.
Yes, Shweta. I mean, one was not completely not expecting this to happen. It wasn't totally unexpected, but the rate at which it has begun to happen is something that I had not, in fact, anticipated. So companies are not even actually waiting for the 1st of October for the GST, 28% GST on face value to be implemented, and are already finding themselves in a situation preparing for the death blow that could be offered by way of this 28% tax, due to which cost cutting is a very, very obvious first step they have already initiated. MPL, Mobile Premier League, one of the major online gaming companies in India, has in fact yesterday let go of 350 employees already in anticipation of the higher tax outgo, which is expected with this 28% GST. So, I mean, these were concerns that were voiced by the industry even last year, not just, when we started discussions around a month ago this year. But even last year onwards, these discussions have been on where companies find themselves to be in a soup and have really been trying to push the government and lobby with the, with the corridors of power and ensure that this tax does not come their way. But unfortunately for them, this tax has indeed come their way, while Finance Minister Nirmala Sitharaman is fairly bullish and confident. In fact, even in Parliament, she mentioned that that the GST collection is going to soar thanks to this 28% tax on online gaming. But unfortunately, companies like MPL have already decided to cut on their expenses, and employee cost becomes one major hit. So 50% of their India team, amounting to about 350 people, are going to be let go of. And MPL is not alone, but let's just finish off on the MPL bit. And if we can pull up that that code graphics from Sai Srinivas, the founder of MPL, and he pretty much says that the new rules will increase the company's tax burden by as much as 350 to 400%. And he says that as a business, one can expect or be prepared for a 50% or even a double 100% increase. But adjusting to such high volumes and a sudden increase of a magnitude which could have an impact of about 350 to 400% on additional tax outgo is something that is compelling them to take some very tough decisions. And these tough decisions indeed are letting go of half their workforce. But that's not all. I mean, there are other, cost corrections or cost mitigation steps that the company is taking, which also includes, the cost outgo on servers and office infrastructure, etc. But yeah, I think a sunrise sector and industry which was attracting a lot of eyeballs, attracting a lot of gamers, a lot of audiences in that sense, had the potential to rake in revenue through advertising, revenue through subscriptions, memberships, etc., is now finding itself in a scenario that it's unlikely to see a sustainable business model going ahead. And these drastic measures of trimming down half its workforce are already in action. But MPL, of course, is a large company. There's another company, Gurgaon-based company called Quizy. And Quizy, in fact, yesterday, its founder announced on LinkedIn that it's not just letting go of people, it's shutting shop completely. So
the business is no more lucrative.
So the business is no more viable. And let's look at the sort of, the strong words coming out from the founder of Quizy, Sachin Yadav. And he says that recent developments in the tax landscape and regulatory environment has left the company with no choice but to bid farewell to its beloved gaming venture. That's not all. He's used some pretty strong words. And let's move on to the other quote that has come from Sachin Yadav. And he says that the introduction of a 28% GST on entry fees has compounded the company's woes, and he's used the word murdered and murdered the industry finally. So not great news coming. I don't know if the government had anticipated this. In fact, a few weeks ago when you and I were sitting right here in the studio, we had put up certain questions to the government ahead of its decision to finally, in the 51st GST Council meeting, to eventually come out and make the final decision on what is the GST levy going to look like. And we had raised these potent questions, and one of those questions was about the future of these online gaming companies. And these gaming companies, unfortunately, are falling off the wayside by way of this 28% GST.
All right, let me also call in my colleague Amit into this conversation. Amit, you've tracked startups. Please do join us. You've tracked startups. You've tracked, companies such as Quizy. What appears to be an eventuality of this would be many of these companies will eventually fall off the radar. There'll be consolidation. Companies that cannot sustain a debt burden of up to 304%, tax burden of 3%, 300%, 400% will not continue to sustain, which is what's happening in this case. So essentially, half the players, which are startups in the online gaming space, will be out of business.
It's a strong medicine that the government has put on them. They'll be probably collecting bigger GST, but I do not know if that works. If most of the companies are not there, where will they be collecting from? But there's a little bit of a good news which I touched upon yesterday. Is 50 million a good number? Dollars?
It depends on the context. If I had a $50 million in my
it's a very good number.
M1X1 from Japan has set aside $50 million to be invested in the gaming sector of India.
Okay.
I'd say set aside that corpus.
I mean, compare it to $1 billion of investments that came in last year. 50 million is a drop in the ocean. So, I mean, you're talking about 1,000 million coming in last year by way of, or was it 2 billion? I think it was...
the entire foreign direct investment into the gaming sector has been 2.5 billion.
2.5 billion. So you're talking about 2,500 million. So 50 million, yeah, okay, sure.
Relatively less,
a sliver of hope there.
But a sliver of hope at a time when the industry is going through perhaps a possible crunch, not right now, will be in the future. But, my question essentially is, with a 28% GST levy, and I understand when the government says we want to tax every possible company out there, and gaming, online gaming, casinos, horse racing should not stay out of taxation ambit.
Right.
But to levy a 28% GST is far too much. It could have been at 18%, which is what the industry was also demanding.
The problem, I think, Shweta, is not as much with 28% as it is with tax slapped on the face value. So a gamer invests, sort of parks 100 rupees to play, 28 rupees straight away goes to the government. So what is left for the gamer to play with is 72 rupees. So if it's a real money game, and even if a rupee has to be earned on that 100 rupees, it's actually not going to be a rupee, it's going to be 29 rupees. Because you've got to recover the taxes that you have paid already to earn that 1 rupee in winning. And then that 1 rupee is subjected to a 30% TDS. So what are you left with? So the broader point is that, mathematically, it's a great formula. A higher tax, ceteris paribus, is going to increase the tax collection, is going to give more money in the coffers of the government to the exchequer. But logically, that's the difference between math and logic. I think logically, a gamer would be deterred to start playing money games on a platform that levies 28% tax. And hence, in this mathematical quest of increasing the tax collection, perhaps logic was kept aside, not hoping or not realizing that this money could also flow out of the shores of India for gamers to find ambits to play on platforms not registered in India.
But the government now says that you've got to have a representative in the country, even if you're not registered in the country, and you would be subject, whether you are an India player, whether you're an outsider, you'd be subject to a 28% GST levy.
If companies see that there is a lucrative market in India where there are millions of gamers, they would want to, they would not mind foregoing this GST and paying tax in the country where their audiences are. I'm not sure if it works technically that way, because it is also then a function of double taxation for those gaming companies. And what is the kind of jurisprudence that India would have over territories where these gaming companies are registered? So, I think all that is a matter of longer discussions and further investigation to see, what sort of tax liability can the Indian government strictly impose on companies not registered in India, even if they're doing business in India. But I think, to look at it in this context, you would see a decline in gaming activity on real cash games for sure, because gamers would not be happy paying 28% straight on any 100 rupees
Okay.
that they invest on
All right.
or spend on the platform.
So
I think the real cash probably may just stay because those are addicts. The cash players are addicts. That's why they so probably they'll stay. So government probably knows that.
Okay.
That's my speculation.
Sure.
all right,
Sure.
we'll see how true that is. I think we'll get to know in about a month or 2 months time rather, by 1st of October, end of October perhaps.
So I think 1st
when-
November is when we should have a 1-month
Okay.
tax collection data
And-
and try and drill
Yeah.
down how much of
How
that
much
came
tax
from
was
online
actually
gaming
collected.
companies. But unfortunately, Shweta, just one more point before we add on. It's not just startups that are dominating the gaming industry. In fact, you have listed companies as well, Gamecraft being one of them, Nazara Technologies being one of them. You have fairly large listed companies, who are who are also accountable to their shareholders and who are accountable to their employees, and these companies also happen to to find themselves in a difficult spot. So we'll also have to look at their quarterly earnings 1st October onwards, Q3 earnings, and see what sort of
Impact
profit
of
after tax are
GST
they-
outgo. Mhm.
Yeah, and I think the government also needs to realize at some point that you have tried to make corporate tax, not GST, corporate tax more attractive. You've got a reduction from 30% to 22% on corporate tax. But one of the discussions in Parliament yesterday actually suggested that FY 2021 actually saw a loss of almost ₹1 trillion, 1 lakh crore rupees on account of this reduced corporate tax. So you are letting go of corporate tax, which is allowed to operate at a lower rate than income tax for individuals, individual income tax, and yet you're charging GST on face value on sunrise sectors. So I think this whole mapping of how the government wants to collect its revenue needs a very serious relook.
All right, a serious relook, of course, is what the government will have to do. Numbers will come out, numbers will make it clear whether the GST collection, by the way of a 28% levy on online gaming, will add substantially to revenues. Will of course bring those numbers up.